In this presentation, we'll take a look at tax software to consider Social Security benefits. In other words, the income that we get, the Social Security benefits that we are receiving, how do we have to report them on the tax return, and what is the effect on taxes? For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are on the 1040. We have our single individual, no dependents. If we go to page 2, our first scenario is that we have the 25,000 Social Security benefits, and that's all we have. We've got 25,000 Social Security benefits, no other income. In that example, we can see that although it's included in cell 5A, it's not included in the calculation for total income. So in this scenario, none of it would be included in total income, and therefore none of it would be subject to the taxes, the tax rate, or the tax table. And that being our only income, then we have zero taxable income, and the standard or itemized deductions don't come into play, and there would be no taxation. Now we're going to add some income elsewhere, so we're going to just say that there's W-2 income of the 21,000, and now we still have the same Social Security of the 25,000, and we can see that part of that Social Security is now taxable. We've got 5B, part of it now being taxable, the taxable amount. To see that calculation, we can go to this worksheet and go through this calculation. We won't go through the entire calculation, but you can see that we're going through a calculation to include part of the Social Security, and in essence, it's going to be related to or tied to the amount of income that we have. So as income increases, we're going to have to include more of the Social Security in our, to tax it in our taxable income. Now, if we increase our income again, now we have 85,000 of wages. We still have the same Social Security of the 25,000, and we can see that we have an increase in the amount that's going to be included in the taxable amount of 21,250. Now, the 21,250 we can say is, okay, 21,250 divided by the 25,000 we received is 85%. And that's basically going to be the maximum amount. So in other words, from a practical standpoint, when you're thinking about this, if you have a high income individual that makes income elsewhere that's fairly high, then the Social Security benefits received are probably going to have to be included in taxable income on 85% of the benefits received. If, on the other hand, we have an individual who has very low income, then it's quite possible that none of the Social Security benefits will be included as a taxable amount. And if we're somewhere in between, then it's going to be some ratio. And of course, that's where the complicated kind of calculation will be. So we'll phase out, we'll phase in, and we'll have to recognize more of the Social Security as the income increases up to that cap of 85%. For more accounting information and accounting courses, visit our website at accountinginstruction.info.